And joining us to break this down is global business consultant Hilary Fordwich. Carl, I know you wanted to introduce her real quick.
I know, Hilary, I was so excited to have you on, and I wanted to say your name in British, so Hilary Fordwich.
That's Cockney London, yes,
Yeah.
Carl, very good.
In British, whatever. Queen's
right.
English.
Hilary, we're going to start with Biden, who is taking victory laps on these recent numbers. Yes, it does kind of ease recession fears because it broke the cycle we were seeing.
Right.
But is this outlook really something to be celebrating?
No, he's trying to spin it, obviously. I mean, Americans really aren't stupid. One thing I always put is faith in the American public, because when they go to fill up their car with gas, or for Carl, petrol in England, but
Yes.
when they go to fill up their car with gas, they know what it is at the pumps. And actually, you remember there was that national, his controversy we had with the little sign saying, I did that, with little Biden stickers. And obviously all the people at the
Yep.
gas stations were having to go and scrape them off. Why? Because the American public could see what is happening. I think one of the things that's the most scary, actually, though, from the recent report is that actually exports have increased. And you might say to yourself, wait a second, the dollar is so strong. How on earth could our global exports increase? You know the reason? Even more terrifying, because purportedly Biden has actually not only released reserves from that the strategic petroleum reserve, which is strategic, that's why it's for our defense, but he's selling it abroad, and that's why exports are up. That is scary.
That is just absolutely bananas to me. But I want to talk about something a little bit more micro. The yield curve, okay? It's been inverted for about 10 months now, let's say, okay? Maybe a little bit longer. But every single recession going back 50 years, and we saw this week that the yield on 3-month Treasury has surpassed that of the 10-year Treasury, okay? So short-term debt is higher risk than long-term debt for the first time in a while, and that's what we call the yield curve inversion, which signals historically recession. We had 2 quarters of negative growth, so technically we were in a recession. This quarter, as reported, it's not. What does this mean going forward, though?
No, you're absolutely right, Carl. It has predicted every single recession, the dot-com bust, actually, also the Great Recession of 2008. And I always think that people think it's so complicated. It's actually very simple. Would you want your money tied up for 30 years? No, that's why always it's more yield on the long term. And as you're right, this inversion is that there is more reward for short term. Why? And you said, what's going to happen now? Well, we know what's going to happen. Jerome Powell, the Fed chairman, he's already going to raise interest rates. We know that's going to happen. We know more Americans are going to be unemployed. The unemployment rate is going to pretty much double by the end of the year. It's 3.5% now. It's going to go to 6% at the end of the year. So what does all that mean? What it means is there's going to be more Americans, probably about 4 more million Americans unemployed by the end of the year. And what it means is that yield curve, that inversion, shows there is a definite recession coming. And that's going to be 2023.
Wow. And speaking of employment here, I had this conversation with some friends, and we want to open it up to you too as well, because should Americans be concerned about their job security and being laid off?
Well, it depends who you talk to. I will say this, Amanda, a few things. One thing, KPMG released a study recently, and it was talking to 1,347 global CEOs who all said what they're looking to do is they're looking to go through some layoffs. Why? Because a company has to look to the future. A company has to say, how do we hedge our bets? How do we protect ourselves? How do we protect the bottom line? And that is usually doing the easiest thing, which is letting go of staff. And I thought a very interesting statistic actually was those job quitters that were all jumping during when things were booming. They are the most likely to lose their jobs. Why? It's last in, first to go. That's a business principle. So a lot of people who jumped for more salaries, they are the ones that are nervous right now.
Yeah, and there's also, I work in this industry during the week, and what the big concern is legacy employees. There's a lot of people who have, had these jobs for a very long time that technology is replacing, and a lot of companies like Twitter and Musk are saying, we don't need you guys because I can replace you with an algorithm. I want to get to the Powerball jackpot. It's over $1 billion with a B dollars. Let's say you win this, you take home 500 and change, okay? Just a measly 500 million. So what is the smart move for people who might win that amount of money in this market?
The smart move is don't tell all your friends and your family because they're all going to want it. No, the smart move actually will give a lot to charity. That's what I always say, do unto others as they would be done by, so help other people.
Yeah.
But I do think the smart move right now for anybody, it depends what age you are. There isn't one smart move, Carl, and we all know that. It depends what age you are. If you're right near retirement, of course you're going to need your money sooner. If you're not going to retire for a long time, you know what? The market consistently, decade over decade over decade, has proved to be a good long-term investment. The question is now, to which actually I don't know the answer. The question is, are digital currencies and is the sort of like the whole Bitcoin phenomenon, is the world going to turn upside down, that it is better not to put your money in there?
Yeah.
So I would say this, the bottom line with everything, this always works.
Yeah, I would say my portfolio right now is virtually 100% cash. I am waiting for this market to bottom out, and I think, like you pointed out, it's going to be worse.
Well, bottom line, don't put all your eggs in one basket. You actually have all your eggs in one basket because you have it all in cash then. But I think it is just good to diversify. Number one, always diversify, because then unless you want to put everything at risk, always diversify, because then you have something in one basket and you can afford to lose that part.
I like to live dangerously. Ellery Fodwich, thanks for stopping by.
Cheerio.